And now we turn to Lesson 7 in our discussion of U.S. taxation. And here we are closing in on the end of the term. Lesson 7 covers pages 33 to 38, I believe. It may be 39. The first subject of 2 is tax credits. And this subject is divided into 4 types. The first type are personal tax credits. This includes the adoption credit, the child care credit, the elderly or disabled credit, and the education credit. These cannot be carried back or forward except for the adoption credit, which can. Take a look at the text for the specifics on that. The second type are business tax credits. This includes foreign tax credits, general business credits, and the alternative minimum tax credit. No examples are shown here at this point. The third type is the earned income credit. This is basically a refund. Even if the taxpayer had no taxable income for the year, the earned income credit is still paid in the form of a cash check. Very nice. Otherwise, it's offset against any taxes that are owed. All right. The fourth type is credit for excess Social Security taxes paid. This could happen if the taxpayer has more than one employer. They may be deducting the full amount of Social Security according to the formula, which we'll examine a little bit. And in that case, one would pay too much Social Security tax, so that would be taken as a credit against other taxes. The next page lists all of these credits in table form and includes what are the qualifications to qualify for using these credits, what are the restrictions and limitations, and the rates and some calculations are also included in this table. We'll examine it carefully during class upcoming. The final topic is other taxes and runs from page 35 to page 38. The first topic here is self-employment taxes. The text lists the qualifications and a formula for calculating self-employment tax. The second is Social Security tax. This one is interesting. Social Security is set at a rate currently of 6.2% of the first $117,000 in income. This means any income over and above is not subject to Social Security tax. So the more you make, the less they take. This is the very definition of a regressive tax. Falls more heavily on lower income families than on upper income families. And this makes sense because the upper income family is much less likely to be relying on Social Security after retirement, since they already have money probably invested in all kinds of neat things. The second part is a list of adjustments. The final tax listed is the alternative minimum tax. The alternative minimum tax was cooked up because people were thought to be getting away with no taxes. This is not so, but in a given year it may look so because taxes have been carried forward or backward and reduced for the current year. But you never escape taxes. That's a general rule that has applied since taxes were invented. So we look at the alternative minimum tax. This is for firms that have very little or no tax. If the alternative minimum is higher, that's the tax you pay. And there are several examples on how to apply the second part is a list of adjustments that are applied to either increase or decrease the final amount of tax owed. The next 2 pages cover the additional rules applying to the alternative minimum tax and gives examples of how to apply them in specific circumstances. The section is highly detailed, so we will need to read and discuss it during class. Finally, we turn to the discussion questions, which are not related to the readings, but are about subjects that we have covered in this course. I am looking for a very general treatment of each of these questions without an excessive amount of detail. Very briefly, they are discussed the application of standard deductions and itemized deductions. Number 2, discuss the qualified medical and dental expenses and explain the computation of medical and dental expenses for tax purposes. Number 3, discuss the treatment and limitation of interest paid for a qualifying purpose. And number 4, discuss the tax treatment of cash contributions and property contributions under the charitable deductions part of the tax code. Well, that does it for this section. We have one to go. I'm looking forward to wrapping this up successfully with you and turning our attention to new topics in the future. Thank you. Bye-bye.